What's up, everybody? GDP is coming out tomorrow. Consensus is at 2.4. What happens if it comes in hotter than expected? It's some good news for the economy, but would it be good news for the Fed? Are they going to step in, gas pedal to the floor, and make this market quiver and shake even more? Well, what's interesting is the Atlanta Fed GDP now is actually estimating it to be 3.1. Now, these are typically off, but I mean, that's by a wide margin difference. Consensus here is 2.4. They're saying 3.1. If it comes in hotter than expected, this could be the catalyst that can really shake the markets up. When is that going to take place? It's going to take place 1 hour before the stock market opens. Also to note, we have some big dogs reporting, Apple being the key one, Amazon, and then MasterCard is before the market opens. Those are the larger mega cap stocks reporting. If you take a look at the heat map, take a look at what we got going on here. Just take a line right basically down the screen right here. What do you see? Well, you see the big mega cap stocks, right? The big squares, Microsoft, Google, Amazon, Meta, Apple, were all down on the day, where you see a lot of green on the screen. So despite the market being somewhat down on the day, right? Dow was relatively flat. If you look at the advanced decline line between all of these stocks, right, in the S&P 500, you actually had significantly more advancing stocks than you had declining stocks. So it tells us that the market's actually still pretty strong here. It's just we're going through some turbulence. So what can be a catalyst that can actually shake this all back up? Well, obviously that could be GDP and also how Apple, reports. It's going to be a wild week. Now, if we take a look at the IWM, what did this do today? It shot off like a rocket ship, but where did it close? It came right back into its weekly expected move. This one is doing stronger than the majority of all the other index products. As you can see, we actually put in a higher high today. We did the same thing with SPY, putting in a higher high, and we did not do the same thing actually with the Qs today. So the Qs brought down. It's still within its chop box, chopping, but it is above an inclining 5-day moving average still at this point. Meta just reported that thing is looking, it was down like 6% on the day just today, but now it's down like 20% after hours. Completely getting crushed. So we'll see how, what the market and how it responds during the cash market session. Let's take a look at the SPY. The SPY came outside of its weekly expected move, and then it started dropping back down, right? You can't be a stock market beginner trading this. This is wild price action, okay? This is pretty similar to what we saw here, where we saw this kind of like big move up, right? Getting outside of that box and then came back down. Then we had some massive gap down. I don't know if it's going to be the same type of situation. We are above an inclining 5-day moving average here, and we're outside of that chop box actually. So perhaps maybe even coming back into 378 and seeing if we could find some strength here would actually potentially be a good opportunity. See how it shapes up. Maybe just something like that where we can potentially play even a long position. But we got to still obviously be very careful given all these catalysts that can clearly do some damage to the overall market. Now, tomorrow, actually no, before I get into tomorrow's expected move, let's talk about a couple of other interesting points at where these important assets are. The dollar. So UUP, I'm using this. It got crushed today, down 1%. However, very interestingly enough, it came right into its weekly expected move. The last time it was around that weekly expected move, it was right here. It was a big crush to the downside. Everyone's like, the dollar top is in. And then we rammed. We just rallied up. Is the dollar top in? Are we going to do something similar? I don't know. But we are by that lower weekly expected move. Another big asset class to watch is bonds. Look where bonds are, TLT. We're right at the upper weekly expected move. So if these come off, right, what does that mean, right? If you've been following the show, if this comes off, yields are going up. And what happens to big tech and heavy growth stocks, especially profitless growth stocks, when the 10-year yield rises at a rapid rate? They get hit. They get hit hard. What happens to the S&P 500 if the dollar bounces from those levels and starts moving up higher? It typically gets hit. And it could get hit hard. So we have just so many interesting things going on, okay? So once again, GDP, right? That's coming out tomorrow, an hour before the market opens. Atlanta Fed is significantly higher than what the forecast is. So if it comes in at consensus, all right, I don't really know what to expect. If it comes in above, be careful, okay? Be very careful. We'll go over what the expected move is here momentarily. And then obviously we're at a lower expected move for the UUP, the dollar, and we're at an upper level for TLT. So we are walking into 2 days of most likely very turbulent price action. How turbulent? Let's take a look at the expected moves for the S&P 500. This is the SPX. We're looking at just going into tomorrow's expiration, plus or minus 42 $64.50 move. We'll just call it 43 just for rounding purposes. $64 move as far as its price in right now till Friday's expiration. So what does that look like? Well, right now going into tomorrow, it looks like it can bring us up to right around the previous high, or potentially crack us down to just about 37.80. So it'd be this gray box. Now remember, expected moves is the market, trying to handicap what the forward-looking risk is going to be. It does not mean that we can't have 2 standard deviation moves. Meta today, right, its expected move was right here. Meta today, actually, I'll just redraw that. Meta's expected move was right here. It came down, and then it did like some weird little bouncy thing, and then it crushed through it. Not quite a 2 sigma move, but not too far off of a 2 sigma move. Okay. Now going into Friday's trading session, what it could potentially look like. Okay. So going into Friday's, let me fix this. No, what happened? There we go. Going into Friday's expected move, what can potentially happen? Well, that can take us down to around 3765 to around that interesting 3900 level, which is something that we've been talking about. Now, if this actually tags either level, take a look here at where this brings us. Okay, right, that level lines us up right to here. What's that right there? That's the chop box, right? If we go back to the S&P 500, but we'll use SPY as a proxy, look at it, it'd take us, the expected move would take us right back into this range here, which is what? Right by that 5-day moving average too as well, that is inclining. So I would like to see some sort of a pullback so we can reassess the situation. I do not like chasing big run-ups. There's no point to do so. We've already seen what happens when you do now 2 days in a row. If you don't remember correctly, right? 2 days in a row, the market went like this. Woo! And then we said, I smell FOMO right here, and went blah. And then the market today, woo! And then it just fell right on its face again there too. Boom, to the downside. Drink. You know who I'm talking to, who wrote that in the Patreon group. Now you have to have a drink. A couple of other things to pay attention to. Daily candle for the S&P 500 has a shooting star candle, right? It's so volatile. We'll see if we get follow through to the downside. Maybe there's a topping candle. It's right by a declining 50-day moving average. And to note, also the S&P 500 bullish percent index RSI right over here is above 70. What do we say when it gets below and above? We say just take your foot off the gas a little bit, pause, be careful. It can get turbulent. That's all I got for you on today's episode. Be careful, everybody. Ooh, it's spooky.